Here are 4 changes in the UK tax system which you need to make sure you are aware of. This applies to you if you own your own business or you're an employee. Most of these are bad when you live in the UK, obviously, but one of these is actually good and will benefit you in your tax relief. Starting with the good news first, it used to be that every mile you drove, you'd get 45p tax relief. This would be up to 10,000 miles. Now, this is going up by 10p all the way to 55p per mile, but unfortunately, if you go over 10,000 miles, this has not changed and it's still 25p tax relief. To be honest, this is quite generous and I am quite pleased with this one. Make sure you guys are tracking if you are driving to anywhere. For me, it's the post office. Tracking how many miles you drive there and back, because this is a really handy one that does stack up that you can put against your tax. Right, so on to the bad news. As we know, the UK loves to tax us as much as it possibly can. So one of the taxes that have gone up is dividends. So a 2% has gone up on every single band. So if you're on the lower end, this is now 10.75% for the lower band dividend tax. And the upper end, which is absolutely brutal, is 35.75% now. So all bands have gone up by 2% for dividends. I forgot to mention, but the dividend tax-free allowance has been froze at £500. So it just means that more people will end up with higher dividend payments and going up in the dividend tax brackets. So this one really might affect you if you're getting any payments through dividends. The third one, I think this one is quite unfair, but the working at home tax relief has been completely scrapped. So if you guys work at home, any added costs like Wi-Fi, heating, working on a laptop, all of this has been completely scrapped. I think this one is a bit harsh and it does put quite a message across. But any costs associated with working at home, you used to be able to take a percentage off just because you are doing that work at home. Now, all of these have been completely scrapped. The fourth and last one is to do with inheritance tax. So any corporate or agricultural land that you inherit, if its value is over 2.5 million, there is only a 50% relief. So anything up to 2.5 million, there is 100% inheritance tax relief. But over the 2.5 million threshold, you only have a 50% relief now. So what it means for a lot of people that are inheriting things like, we'll say, farms, 50% of the value over 2.5 million, they now need to figure a way to sum this money up to then pay their taxes on it. What it means is a lot of people who are inheriting these businesses or land have to actually sell a part of it, part of the business, part of the land, just to pay off this tax. So I think this one with such a big value and such a big potential for large sums of money in the form of tax, maybe could be quite harsh. Again, just means people suddenly now have to think how they can raise such a big amount of capital to pay for tax. Those are 4 ones, tax tips that have changed slightly that hopefully you guys can bear in mind and take forward just to make sure you are aware of. Thank you guys for watching.